The death of warehouse industrial investments. Now, we've seen unprecedented boom in the last 4 years in industrial warehouse investments. Now, traditionally, warehouse industrial investments has always been the top in terms of giving you the best returns and yields in terms of cash flow, but also the lowest in terms of capital gains. And it has always been one of those tough things to really rent out because, let's face it, once you have a warehouse, it can't really be retail, it can't really be office space. So it's very hard to repurpose if it's, for example, large industrial logistic warehousing. So right now, why did we see a boom in the last 4 years? And does that boom mean that it's really, really hard now for you to get into buying a warehouse property? What kind of warehouse property should you be investing if you're really thinking of investing into it in the next 12 months? And is it even worth it? What kind of returns? And finally, are you paying too much for your warehouse property? I'm going to answer all these questions on this video, but make sure you stay tuned to the end where I'm going to be sharing with you what type of properties that is going to sustain the current changes in the market and what kind of industrial properties in what areas should you be looking for to give you a secure investment if you want to hold on to that property in the next 5 years and really reap the benefits of that in both cash flow and growth. My name is Helen Tarrant. I help everyday Australians become wealthy and retire financially free via commercial property cash flow. So if you want to find out more about what I do, I help you in education, I help you in educating you in how to invest in commercial property, but at the same time have a boutique commercial property buyers agency. Now, we only do commercial property buyers agency in comparison to other buyers agent out there where they do both residential and commercial. We've always been commercial. I started investing in commercial property since 2012 and have actually leveraged my portfolio to over $10 million within the first 5 years and have already retired on my commercial property cash flow. But I came back into the market to help everyday Australians become wealthy through commercial property, and I'm going to do the same with you as well. So if you look back, you've seen us do countless deals and we've shown you the yields throughout time. I'm still the only educator that does free events around commercial property, and we are the agency here at Unicorn Commercial Property that the savvy investors go to if they want to beat the market. So let's get started. Now, you're thinking of investing in a warehouse property, but what you have seen is that in the last 4 years, the warehouses continue to grow in not only popularity, in security, and also in value. So you want to get into the market, but have you missed out on the market because they've had 4 years of boom? Is it going to continue? So let's dissect this a little bit. So this is a classic example here that I put a client into an industrial warehouse property in the Sunshine Coast. So this property is in Warana, and it is a industrial property somewhere around that 300 square meter space. Now, at the time, it was divided into 2 tenancies. You don't have to, but this property itself was divided into 2 tenancies, and it had one on a slightly shorter lease, one on a longer lease, and it was bought for about $900,000 on a 7.5% yield. So yield in commercial property is the cash flow return of that property. So on 7.5% yield on a $900,000 property, it's about $63,000, $65,000 in net rent. Now, when I say net rent in commercial, it is after all the outgoings have been paid and that what comes into your bank account is totally net rent. And yes, that means insurance has been paid. Yes, that means strata has been paid. Yes, that means management fee has been paid. And yes, it means all the rates has been paid. So yes, paid by the tenant. Right? So what comes into your bank account is that absolutely net amount that now you use that to pay the mortgage. Now, we all know what happened in 2020, right? So this property was literally settled as COVID was about to hit, right? Back then, commercial property wasn't the favorite, and definitely commercial property with industrial warehousing wasn't the favorite at all. So we got a really high yield in the Sunshine Coast. Now, that meant that right then at that time in 2020, the interest rate was probably around that 3%, 4% mark. This particular client was clearing somewhere between $25,000 to $30,000 on this one property alone. After all outgoings, all mortgage, he was clearing that in hand. So that's a fantastic deal. Now, fast forward 4 years and he's gone to refinance his property. So we're at the beginning of 2024, he's refinanced that property. Now, the value of that property came in at $1.257 million. And the yield, which is a cash flow return in that local area, has dropped to 5.5%. Now, what does that mean? It means that more and more people have actually come into the Sunshine Coast area and bought properties, especially warehouse properties, because as more and more people come in to buy this property, it pushes the prices up and the returns down. Because let's face it, we can't just put up rents infinitum. We can't just put up rents willy-nilly. And if you look at it, in the last 4 years, rents in industrial really only started to increase in the last 12 months rather than now. Only in the last 12 months have we seen an increase in the rents in industrial warehouse properties. Previously, it was pretty low, right? And it's because most people in manufacturing or logistics don't have hiring a warehouse built into their hiring a warehouse and paying massive rents built into their pricing model, right? And so warehouses typically are charged lowest rents amongst retail and office spaces and any other form of commercial property. So really, you wouldn't be getting a lot of rent for your warehouses. But what all of a sudden happened in the 3 years between 2020 and 2023 is that we started working from home. People started e-commerce businesses. People started switching from being in a retail to being in a industrial warehouse for example, communities, workshops, for like dance studios, for karate, for play centers. It started becoming a little bit more retail than in traditional warehousing. And as such, the rent started to go up. And as a flow-on effect, it pushed the value up along with the demand. So this particular property in the Sunshine Coast became 1.257 million from first buying it in 4 years ago for 900,000. So that's a 40% increase. That's a 10% year-on-year increase. However, rents has also gone up during that time. So the investor himself has picked up $25,000 to $30,000 on the first time buying this property in the beginning. Over the 4 years, even as the interest rate went up, he still accumulated cash flow in the hand. And as the interest rate hit its peak at about 7% or so, when he went to refinance at the beginning of 2024, he was still getting 10 to 15,000 in hand because of the rising rents, right? So he was able to pull out an extra 300K to buy another property against this property without him using servicing from himself because the rents were already showing positive. So nothing was relying on him, and he was able to go from one property to now the second one, the $300,000, allowing him to buy another $1 million property. That's a fantastic dream scenario. Now, can you repeat this if you want to invest in industrial warehousing? Now, I've got an interesting article that I've just picked up from the Property Council of Australia. This particular article, and let's read it, says, what drove $3.3 billion investment in warehouses over the last 5 years? This article was written in April 24 in 2024, so this year, right? And it was written by the Property Council. Now, what's really interesting is some of the points I've highlighted here is Australia's industrial property sector is booming with 33.3 billion investments in warehouses over the past 5 years. Now, that's just exactly what I illustrated in my example previously. And driven by business embracing not only green initiatives, according to a new report from Savile Australia, but the adoption of renewable energy, advanced manufacturing is fueling the demand for industrial space nationwide. That's a good thing because it means that there's still going to be more demand coming through. Now, earlier on this month, this is April, the government announced it will create Future Made in Australia Act, which hopes will revitalise manufacturing in Australia, because we know that's been in decline, led by net zero goals, and more details are to be announced during the budget. So obviously that's bringing together new initiatives and trying to rejuvenate the manufacturing industry, which is going to be great if you're looking at investing in warehouses. Now, what's also interesting here is later on in the article, it says over 10 million square meters of new industrial space has been added to the East Coast market since 2019. So developers are actively building more warehouses out there. 10 million new industrial square meter space in the last 4 years. And that did not stop the growth and the value of the properties, right, in industrial, right? Now, it all goes on to say, while industrial demand has historically been driven by warehousing and logistics, manufacturing is posed to see a greater focus going forward, which is great because Australia doesn't have a manufacturing arm or a really robust industry. So having that will put more demand into the warehouse space. With a strong policy framework and increasing investor interest, this rebound is posed to reshape Australian industrial property market for years to come. This is good, right? But this is a really interesting thing. Then he goes on to say, while global industrial investments dropped by 39% in 2023, which meant that people stopped buying industrial properties as we came out of COVID, Australia's industrial sector saw a small decline, 35%. Right, that's still quite significant in terms of a whole investment space in terms of commercial property, right? With investment volume significantly higher. So while we had a decline in industrial sectors, meaning people are not opening new industries and utilizing industrial space, that decline of 35%, the volume of investments increased by 56% compared to pre-pandemic averages. So there is 56% more people investing in industrial warehouse properties today than they did in 2019. So you've got a lot of competition in the market if you want to invest in industrial warehouses right now here, right? So goes on to say, following an unprecedented 3-year growth period marked by face rent soaring up to 80% in selected markets and vacancy rate at below 1%, there has been a significant surge in capital-seeking investment opportunity in the industrial sector. So this is where it comes down to what I want to recap today and give you some strategies moving forward, is that we have seen rents go up because traditionally, again, industrial properties has been one of those, rents are just like $100, $120, $150 a square meter, nothing changes, right? But you brought the retail tenants in, because ultimately when we dissect and look at the commercial market, who pays the highest rent? Your retail tenants, right? Because they're direct to consumer, the consumer ultimately ends up paying for it and they pay the highest form of rent. Now, they pay the highest form of rent. If you look at it, they might be medical, there might be people who provide a professional service to you, there might be allied health, all sorts of these tenants pay the top dollar in rent. Government tenants. Now, they've shifted their dollar because a lot of their business have gone online, right? You can have e-health, but you can also do a lot of logistics in terms of shipping you products. And they've moved to online rather than retail stores. And they've just taken this money and put it into warehouses, right? And because they've taken this money and put it into warehouses, they've actually pushed up the rent. So instead of being $120 or $150 a square meter, a lot of that rent has gone to $250 a square meter. So that meant that the rents have gone up. If you invested in a warehouse here before the rents went up, you would have had exponential gains. That exponential gains is the rent, which now will give you over 10 to 12% cash flow return on the property. Plus, the value of the property also went up, which meant that now you picked up 30 to 40% growth. It's a trifecta. It's a dream investment. That is if you invested 4 years ago. Now, what happens today? The rents have already gone up in about 80% of the areas across Australia. Sydney, Melbourne, Brisbane, Adelaide, ACT, the rents have gone up, right? But now standard rate is between $200 to $250 a square meter across the board. Even in regional areas like Rockhampton and Townsville, we're still seeing $200 to $250 a square meter in industrial rents. Number one. Number two, now the prices of warehouse properties is 40% or 50% higher than what it was 4 years ago. So you've had rental increases, you've had value increases. How do you move forward as an investor buying an industrial warehouse property? Are you overpaying for it? Well, let's look at one thing. Firstly, across the board, a new benchmark in pricing has been established for industrial warehouses, right? You want to buy into industrial warehouses, this is the price you have to pay. And the price is typically somewhere like, you want to be in an industrial park, it's going to be somewhere around 1 to 1.5 million, right? For a strata, tilt slab, industrial property. You want to be freestanding, 3 to 3.5 million. Starting out, freestanding industrial properties. You want anything with bigger land, logistics, more medium to heavy industry, 5 mil plus. That is the truth of where that market and what that pricing is. And we know the rents, $200 to $250 a square meter averaged across. You might get a little bit less if you're in Victoria, a little bit more you might be paying in Brisbane, Gold Coast area, right? But pretty much the same. So how do you move forward? Where do you find the bargains? Where do you find the value? Now, I'm going to give you some tips. So thank you for staying. Now I'm going to give you some tips. Again, if this video is of value to you and you really want someone to handhold you through the process, a team to surround you who really know the market from the beginning. Like, I've been investing in commercial property since 2012, built not only my portfolio, but countless client portfolios and made them rich and helped them retire faster through commercial property, literally in 3 to 5 years' time. You need to click the link below, book in a strategy call, or join one of our free live events where I can share with you how you're going to be able to do it. But remember, if you love this video and love what I'm talking about, hit the bell and subscribe and join in for my other videos. But really do spread the word about commercial property. Now, coming back to it. If you're thinking of getting into industrial property right now, forget about investing in man caves and silos and stuff like that, right? Silo properties. Yeah, you can buy a 20, 60 square meter property. That's been one of the biggest oversupplies, or will be one of the biggest oversupplies we see in the market in the next 2 years. Now, why? Because functionally, it is not a industrial warehouse. Yes, it's built on light industrial land. Yes, it has got a roller door and a doorway. Yes, it's got the height clearance. You can build a mezzanine floor. But let's look at it. Tradies, 1 person, 2 person, need to be able to park a truck into it, need to be able to have stock, need to be able to have a workspace, need to be able to have an area to do invoicing, need to be places to put their tools, need to really be able to drop off logistic-wise and get cars in and out, right? Need to be access to the freeway, need access to other roads or other trades. They don't need a 20 to 60 square meter space. They need 120, 150 square meter space to, as they expand. Let's look at a 3 person. Let's look at your typical mechanic. Let's look at your typical dance studio even. Let's just look at typically when you have 3 or 4 people working in a business where it might be carpentry, right? You're going to need at least 250 square meters. I mean, that might seem like a lot, but you might also have a mezzanine floor where they can put a lot of stock. They have an office where they can do invoicing. They have one lady might come in, and you've got people, trades coming in and out, going through the back, and you've got cars to be able to park inside the actual industrial warehouses, right? 250 square meters, right? We go up and one more level where you might have 10 people working for you, and they might be in light manufacturing, whatever it is, right? They're going to need 400 square meters of space plus yard, plus land space, plus spaces where they can bring logistics, cars, and drop off or vehicles, right? So 20, 60 square meters isn't going to cut it. That's a hobby warehouse. That is for personal use. Might be a photographer. Perfect for it, right? You might do some e-commerce business yourself, or you might join in with a friend and you just go do some logistics. You build up the mezzanine floors, you've got your stock, you can work underneath, and it's a startup business, right? It's basically you move from your home, studio at home that you're sick of working from home, and you move in there, right? The parking there, you don't get parking at the front with places like this. You have to park further out, bring your goods in. It's hard for things to be dropped out. You're always blocking someone's way. It's like self-storage, but a little bit bigger. So silos, right now, for most people, it's cheap to get into industrial. It's marketed as industrial. You sell it for $250,000 to $550,000, sometimes a little bit more. But because of the speed and the prolificness of the build, in about 2 years' time, we're going to see it being very stagnant, oversupplied, not being able to rent it out because it doesn't suit the market and the demand of traditional industrial and what people actually need. And it's going to be stuck. And most people are going to be going back at itself. It's for owner-occupiers rather than for investment. So if you're an investor, I personally will stay away from silos, man caves, MySpace, all of those things, right? I would be looking at traditional, smaller warehouses in a business park where we have lots of subtenants together and lots of other tenants that feed onto each other, making it a destination. So I would be having 150 to 250 square meters space, give or take 10% on each side, in terms of your smaller warehouses. I would be looking at medium-sized warehouses anywhere from 250 to 400 square meters for medium warehouse, but has to have some land, doesn't matter if it's with other people, have to have some land. And then I will be looking at 400 plus further out of town, further out in that fringe areas where there is land where later on the area might gentrify, and I might be able to knock that down and develop smaller warehouse spaces, right? So if I was a current investor right now in the warehouse industrial space, these are the 3 types of properties I'll be looking at. I wouldn't be looking at silos. I wouldn't be looking at MySpace. I'll be looking at 150 square meter, give or take, to start with, going up all the different areas, right? All the different, depending on which level of investment you are. I'll be focusing on metro fringes, get away from the cities, because as cities gentrify, what we're going to have is the push out of, the councils will actively want to get rid of industrial space. What they want to do is they want to put in more retail spaces and get rid of industrial space. So the fringe areas will start to become more popular. The land value will go up, and so you'll get an uplift effect in terms of the value because of the land. So I will be looking at fringes, and I'll definitely go to large regional areas and try to buy properties freestanding on land. Not because all of my clients invest in regional. I've got a whole heap of clients that invest in metro. But the reason I look at that is if you can't afford metro and you really want to be industrial, you can get really decent properties on good pieces of land in large regional areas, somewhere around anywhere from 1.5 million to 2.5 million. And that will hold its value for you, and you'll get consistency of income, and the rent will continue to grow in those areas, and you will end up with a property that gives you both cash flow and growth as well, even though the growth might be slightly smaller compared to buying in metro areas. I will look at new areas that may be coming up. This seems a little bit far right now, but definitely have the potential to be more in the next 10 years if you're looking at a 10-year hold. Again, if you are looking for specifically exactly where to invest, the kind of returns, the kind of yields, how this strategy really plays out in terms of money in your hand and the growth that you need to see, that certainty, you need to book in for that strategy call with my team here at Unikorn, and also join one of our free events so that you can understand commercial property better and how warehouse and industrial will help you move forward. If you love this video, hit the subscribe button, and I'll see you in the next video where I'll be talking about $1 million retail property versus $1 million office spaces, so that you can understand if you had $1 million, what would be the best form of investment for you right now. Thank you for joining me, and I'll see you in the next video. Bye for now.